Good morning, good afternoon, and good evening, depending on your perspective, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and it is a pleasure to be with you guys as always on a weekly basis. We hold our webinars. Usually they are on Wednesdays at same time, but today, as a variant to the normality, we are holding this webinar ahead of the FOMC meeting, which is taking place tomorrow. A little bit about myself. I've been in the industry for just over a decade. Worked as a hedge fund trader for Bank of New York Mellon and Bank of America. At AvaTrade, I work as a chief market analyst, and I had the entire research for AvaTrade, so on a daily basis. All the research that you are reading on AvaTrade's blogs or on various different sites is pretty much written by myself. And also on a daily basis, we produce videos, which I'm sure that you guys are very much aware of, and you are learning constantly. Look, guys, this trading world is really a learning curve. It's a long learning curve. And the most important and the beautiful thing about trading is that no day is similar to any other day. There's always an excitement in this market because something is always happening, whether it is on the geopolitical front or whether it is something to do with the economic data. And more recently, we've also seen how health issues have become the central focus for these particular markets. So now I think it is time for you guys for me to learn a little bit about you guys. So in a series of few questions, first of all, please let me know if you guys can see my display and you can hear me perfectly as well. So please kindly say yes or no. All right, that sounds good to me, because obviously I don't want it to hold a webinar where you guys cannot see my screen or you guys cannot hear me, right? Because that is the most important thing. And once again, I want to congratulate you guys for being part of this one, because really, folks, I remember when I started my trading experience or my trading this learning curve, I always used to make sure that the guys that I like the most, I'm following their webinars, I'm following them on their Twitter, on the social media accounts, and then making sure that what they are saying is I'm able to digest that, and I'm really I can learn from these guys as well. So let me continue with the two questions that I always ask, or three questions, let's just say that. So first of all, please say yes if you have been trading over a year or so, or less than a year, let's just say. Okay, so we have people who are in this group who've been trading for less than a year. That is perfectly good, because this just shows me that that there are newbies into the system, and then so that I really have to adopt my style in a way that you guys can really digest what I'm about to tell you with respect to the FOMC meeting. Now, please say yes or no if been trading for over 2 years or so. All right, okay. And the final question, please say yes if you have attended any of my previous webinars. Oh, wonderful. Seeing a lot of familiar names. Guys, it's really good to see you guys back. It's really good to see that you guys are so much committed to learn. And then I really hope that, I'm adding value to your trading, and you guys are learning every time new things, because of course, some of the content is similar to the previous ones, which we have to for a housekeeping perspective. But the levels, the strategies, the kind of things that we really discuss, it is all dictated by the market. And that is the area where you really need to focus more, and then ask me as many questions as you want. I will be taking questions as we continue forward. So let's begin the webinar and see what exactly is on the agenda. But before we do that, as always, it is important for us to go through this slide of risk warnings and disclaimers. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own advisors who'll be more aware of your financial risk. Now, the most important thing for you guys is, as always, to make sure that you know the information which is impacting your trading, right? So whether you are trading equities, whether you're trading Forex, whether you're trading commodities, whether you're trading anything, you know, there are fundamental news, there are fundamentals that are really driving those prices to different technical levels, because the reality is that it is the fundamental news which really drive the price to a next resistance or support level. They don't just move themselves. There is some sort of an external factor, and that external factor happen to be that fundamental news. Now, how do you get those fundamental news? Of course, you can go to, you know, big financial sites like CNBC and Bloomberg, but the reality is, by the time you will go to CNBC, Bloomberg, Wall Street Journal, so on and so forth, it will be too late for you to really know that what really happened and what has triggered that particular move. Now, in the real time, if you wanted to get those sort of information, you know, Twitter, for me, it is one of the most quickest way, because you get information in a 1 or 2 line max, and then you know why euro all of a sudden has started to move higher, or why gold prices are retracing from their record highs, or why oil prices have started to move above the $40, or why the Dow Jones index isn't really moving up, or why it has moved up all of a sudden. So all of that, you know, can be learned from Twitter. So all what you have to do, again, I'm going to show you everything, how to follow, and then who to follow and what to do with that. It is important for you guys to be on Twitter and then join Twitter and then get those notification ins. The 2 different handles are right in front of you. My handle, you can come and communicate with me on a daily basis, ask me questions, whatever you like. I'll try to be as much responsive as I can, as humanly be possible as well, and I will answer your questions. And the handle is Naeem Aslam 23, and for AvaTrade it is AvaTrade, right? And second thing that I kind of wanted to highlight with you guys is our YouTube channel, AvaTrade's YouTube channel. Over here on a daily basis, what I do is I produce 2 different kind of videos. First of all, it is your fundamental news. So fundamental news is slightly more digestible, more easier version of what is really happening in the market, because, you know, if you wanted to know that what are the factors that are moving the markets and why they're moving the markets and where the prices are really going to go to, so all of that sort of fundamental news, it is in the fundamental video. And for those traders who are, you know, who know how to read technical analysis, who know how to trade on the technical analysis levels, I do technical analysis videos as well on a daily basis. Again, something which is quite important for you guys to learn. So let me show you how to go around it and then how to find everything. So what you can see is on the Twitter, here is my profile right in front of you. You can see, you know, it's fairly very active on a daily basis and send you all the different analysis and then thoughts and conversation. This is the best way to engage. And then there are also smaller videos over here as well, less than a minute or so, or 2 minutes, where you get all the information fairly quick straight on to you. And then this is the AvaTrade account. And when you are following that, make sure that you have this verified Twitter account sign on AvaTrade, because there's always scammers walking all over the place, so you don't want it to kind of follow them. So you make sure that you are following the right account. Now, in terms of YouTube, here is a YouTube account, AvaTrade. This is the official account, and then here are the videos on a daily basis. Again, you can learn all of that sort of stuff and stay up to date on in terms of a fundamental and technical news. Now, let's go back to our agenda. In terms of our agenda for today, what time am I posting on a YouTube daily? I'll say that before 10:30, between 10:30 to 11, the videos are up UK time. I'm really referring to, but the analysis on the AvaTrade's website is up before 9 a.m. So you really have all that information, and then also keep following, engaging. If you don't see it, ask me on Twitter, engage yourself on it, and then ask me questions on that. So I'll be very happy to do that. So in terms of agenda for today, what we're really going to discuss is the importance of US FOMC, what instruments to trade, the current state of markets analysis, what matters the most for markets, and of course defining levels and defining strategy. Now, in your opinion, for those of you who've been trading, what is an FOMC? Just to get the idea, after you guys know what exactly we are talking about, can you please explain to me in a very simple word, what is an FOMC? All right, so we got a few people replying saying that this is the Federal Reserve Committee. So basically, in a very simple English, or in a very simple term, the Federal Reserve is the central bank for the United States, which decides its monetary policy. And that monetary policy is whether the Fed is going to buy more dollar, whether they're going to buy more assets, whether they're going to increase the interest rate, whether they're going to decrease the interest rate, whether they're going to stop the asset purchase program, which the Fed usually start the asset purchase program when they think that the economy is in need of more stimulus. So they start printing money, and that money goes into US corporates, and US corporates gets the liquidity, and the business cycle starts to boom again. We've seen that during the financial crisis, when the liquidity crisis happened, the Fed came and then saved the day. We've seen that again on the March 22nd of this year, when the liquidity crisis really happened. The market crashed, the Federal Reserve came, and then it reduced its interest rate, which is near enough to be zero, and then it also increases asset purchase program. Now it is buying corporate bonds. I don't want to go into that because that is too sophisticated for this talk, but just for a sake of understanding, they've initiated a program which helped to prop the stock market higher, because they're pumping money into the companies which are struggling so that they don't go bankrupt. If companies don't go bankrupt, they have a liquidity. That means they can survive for a longer. That means that they can really resume their operation and ride this wave out, right? So that is pretty much with this one. Now, in order to find this particular information about the FOMC, when that FOMC statement is really going to come out, again, you can go to AvaTrade's website, or you can go to Forex Factory. When you go to Forex Factory, you will see that the information of this one is going to come out tomorrow at 7 p.m. London time. So on Wednesday, as you can see on the 29th, this is the FOMC press conference, 7:30, and at 7 o'clock, the FOMC statement comes out, the Federal Reserve Committee's interest rate decision. Now, that interest rate decision, what is anticipated in the market is that the Fed isn't going to change the interest rate. So whatever the Fed says, it is also going to influence the prices for the equity, stocks, and commodities as well. Why? Because it is going to influence dollar. When dollar gets hit, everything gets hit in the commodity and in the FX space. And in the stock market space, that means that the Fed is here to stay, to support the market for a longer period of time. And that is usually taken as a more positive sign from a stock market perspective. And so the anticipation from the Federal Reserve is that the Fed is going to support the market for a longer period of time, and they're going to keep the interest rate at its current levels, because if the Fed start to increase interest rate, that means the cost for borrowing increases, right? So it's like, consider that you have a loan and all of a sudden interest rate goes up. That means you have to pay more payments, so that, you know, decreases your chances of survival, or at least makes things more difficult. So that is why, as long as the Fed confirms tomorrow that it is going to keep the interest rate low for a longer period of time, and then it may actually start buying more assets under the SQE program, then the market is likely to take that as a positive signal. So, and again, we will discuss everything in relation to the stock market, and how it will really impact that, right? So the second thing with that is what instruments to trade on the back of FOMC. So at 7 p.m. London time tomorrow, you are likely to see higher volatility when the decision will come for the euro dollar, for sterling dollar, for all the currency pairs which are trading against the dollar, sorry, not the euro, right? Whether it's a yen, whether it's a Swiss franc, whether it's your NOK, whether it's a Kiwi, whether it's a sterling, you know, whether it's euro. So anything which has a common denominator as euro, that is likely to have a major influence. On the second hand, something else which is also going to move is your gold prices. Remember, because gold is also in dollar terms. So once that Fed will confirm that, okay, you know, they're going to keep the interest rate low for a long period of time, and then it is a very dovish message that the market thinks it is, then that means the dollar index will start to move lower. If the dollar index starts to move lower, that means gold prices are likely to move up. And we can hear the same sort of a stance with respect to the oil prices as well, because oil is again in dollar. And once the dollar becomes weak, oil prices, both Brent and WTI prices, can start to move higher on back of that as well. So again, something quite important. But at the same time, remember, tomorrow we also have a crude inventory data at 3:30 UK time. So, but all of that effect will be already, you know, that dust from that would have settled by the time that the Federal Reserve is going to make its decision. So we wouldn't see much of an influence from that perspective. Now, that is everything so far make sense to you guys before we continue with the levels and everything else? Please say yes or no. And if you have any questions. Okay. All right. Okay. Right. What is the best way to get this information? How is the oil price affected? So again, oil price, when we look at oil, right, crude oil, it is trading in the dollar terms, right? Look at over here. Crude oil is trading in terms of dollar, right? So if the dollar is going to fall, that means, you know, crude oil is likely to become more expensive. Same for a gold price as well, because everything trades against the dollar. And what is the best way to get this information? I'm not sure what do you mean by what is the best way to get this information. What do you mean by that? What is the best way to get this information? I mean, if you wanted to hear about this information, you know, again, we put that on our blog, on AvaTrade sites, and also in the fundamental news, the one that I've shown you on a YouTube channels and stuff like that. Right. Something that is slightly bit off topic, but I kind of wanted to touch base on that because I think there's an opportunity here as well, is the Bitcoin prices. Bitcoin prices are also kind of going higher because of a weaker dollar. Again, you can see BTC is USD right over here. It trades against the US dollar. You can see BTC crossed above that critical level of 10,000 recently. You know, it happened over the weekend, obviously. Now the question really is that can it stay above the 10,000 mark? That is the most critical question with respect to traders. And I think, you know, if the Federal Reserve confirms that, you know, the dovish message comes out of from Federal Reserve, then it is likely for Bitcoin prices to continue their move to upward. But we really kind of move above this yesterday's high of 11,000, and then it seems like that the candle as of today is still looking very, very bullish because we are already at 10,968. So we can continue this momentum to the upside. We, under no circumstances, the price should move below 10,000, because if it breaks below 10,000, you know, then it is really going to be like, again, those conversation will start coming up that, okay, when the gold price really is going to go back above that 10,000 mark and how that will happen and so on and so forth. So that is quite an intriguing aspect with respect to that. So it's important for us to keep an eye on it. So but for now, I think Bitcoin price looks pretty bullish to me. I think it is, the chances are that it is going to go all the way to 13,000 or 14,000 if the momentum continues in this direction. Now, something else which is quite important to discuss is obviously your gold prices, right? So we've written quite a lot on gold prices on a daily basis as well. Again, there's a, you know, on a Twitter, you could see that we've been talking about it. As you can see that the recent tweet right here is all about gold, that gold price reached almost 2,000 today, is 3,000 is the next level. So go and have a read of this article, share with your friends and stuff who are interested in it. There's a very, very good information in that article, really. So you could really find it quite useful. Again, it's right here under the Twitter, under my Twitter. So get engaged in this one as well. But right now, the conversation is that, okay, are we going to continue to move higher from here? Will the price will go above the 2,000 mark? I think it is very, very likely. Where can I find the article? You can find the article once again over here on Twitter. It's here. So you just click on it. It's on our website and also on Forbes website as well over here. As you can see, it's right here. So if you just type name Aslam Forbes, so it will come up. Alternatively, you can go to AvaTrade.com. And when you go to AvaTrade.com, the site is a little bit slow. So you will go into education and blog, and then you will see it under here, education. Click on it, then you will go to blog, and then education, come on, education. My computer is very, very slow, I'm sorry. So, you know, it's not working the best, but when you click on it, you will see over here further information, and then you will go from blog to, you will really move on to that. Right, okay, so I hope that answered your question, but have a read on that one. I can send you the link if you guys need the link, just in case. Here you go, the link is gone, sent to all. The link is gone into the chat to all of you guys, so have a read of that, and do share it with your friends and stuff if you feel like it is worth for them to do it. But I think for me, when it comes to gold prices, I think it is really gonna be, you know, the move is due to the upside. I think more momentum is still due. Yes, on the weekly time frame, we are, you know, this candle is looking very, very scary right now, because it looks like that you know, a doji is forming on a weekly time frame, and doji is forming after a massive momentum to the upside, especially the big moves that we've experienced last week. But the fact is that this is the first time since 2011 that the prices have really gone above the all-time high of 1921. So this rally is really starting now. So if that is true, that this rally is only starting now, so that means that the next level the major resistance level for gold price is no longer 2000. I think the next level of resistance for gold prices is really going to be 2500. So this sell-off on a daily time frame that we're seeing today is a bit of a shake-off, shaking all the trades and investors booking some of the profits and then really taking it to the upside. Can you give me the line that you have in the middle of this chart? Yes, sure. So these three moving averages, I was going to explain that to you. So these three moving averages that we have is on a daily time frame, obviously they become your daily moving averages, and on your weekly, they become your weekly moving averages. This is your 200, this is your 100, and this is your 50 day, right? So all of them, this is 200 day, 100 day, this is 50 day. And then when we go to weekly, so this is your 200 week, this is your 100 week, this is your 50 week. So these are the moving averages that I really kind of look at all the time. And in terms of a retracement with respect to gold prices, I have done the technical analysis on that. So there's a separate video on a YouTube. So go and have a look on that as well. It's quite important because we talked about all of that, and I don't want to redo the same thing that we have discussed previously. They are all SMAs. I don't use EMAs on a bigger time frames. EMAs don't really work on a bigger time frames, but SMAs are much better on a bigger time. It's smooth moving averages. All right, with respect to Dow Jones weekly, now another reason that we really think that the stock market, this rally in the gold prices can be really likely to continue is because the stock market isn't really confirming that it is going to continue its journey to the upsides to a larger extent. Why? Because when we look at the weekly chart for the Dow Jones, it is really trading very, very close to its 50-week moving average. Now, keep an eye on this one ahead of the FOMC meeting tomorrow. If the Fed fails to impress the market, remember last week we already have a one negative candle. And the high of this candle was pretty much the high of the week before that. And then now we are challenging the low of a last week. And if we cross below the low of a last week, really we're going to drop below this 50-week moving average. And the moment that we drop below the 50-week moving average, that means a little bit of a chaos for this current stock market. Of course, if the Fed resumes that, and then if we get a stimulus package over in Washington, which is being currently discussed, that is likely to, the sell-off which will happen, which can happen in the coming days, could be an opportunity. So keep an eye on the 100-week and on the 50-week, because prices are likely to bounce in around these areas very, very quickly the moment that we get the stimulus news. And that stimulus news, my folks, my friends, is about to come very, very soon. Soon that those policymakers, Republicans, Democrats, and Donald Trump, they can all be on the same page. We can have the next stimulus package. It is likely, it is pretty much given that the stimulus package is going to come, but just the thing is that what will be included in that stimulus package, that is where the biggest debate is among investors and among everyone else. So any retracement in the stock market is likely to be an opportunity. Now, with respect to S&P 500 index, what you can see on a weekly chart is the S&P 500 index is obviously a broader representation of a market, obviously, and what it shows is that S&P 500 index is much, much powerful, much better index to trade in terms of if you are looking to trade the index, then it is your S&P 500 index. So if a retracement happens for the S&P 500 index, we may not see the prices coming towards its 50-week moving average because it is quite far. But if that happens, then the Dow Jones weekly, on the Dow Jones weekly, the price could perhaps come near its 200-week moving average. And at the time when the price on the Dow Jones will be touching its 200-week average, there's a possibility that the S&P 500 index could be touching its 50-week moving average. So, if those two signals comes at the same time, again, that will pretty much confirm that, look, this market sell-off is over, and then now the market is about to take its turn to the upside. But if it drops below the 50-week moving average and the Dow Jones drops below its 200-week moving average, then really it's a stock market crash once again, and that crash will lead the markets back to this 17,765 level. So we got like 3-4 minutes left before we finish off. So I kind of wanted to give you guys some opportunities to ask me some questions. Remember, as always, that there is nothing right and wrong when it comes to questions, so feel free to ask me some questions. So the questions are like, okay, can you check on NASDAQ? Okay, so NASDAQ 100, NASDAQ, again, what we've seen NASDAQ was that we had 2 weeks of NASDAQ of selling, right? And still the momentum isn't really to the upside, because we are, first of all, we are well below the last week's high, and then we have a 2 consecutive weeks of losses, and then we have and last week we also made a lower high as well. So I'm really looking at the price with respect to last week's high and last week's low and last week's high. If the price breaks below the last week's low, then it really means that the Nasdaq is really going to continue its momentum to the downside. But if it starts to consolidate, that is a good sign, because then these moving averages, which are trading very, very far, will get some time to get close to the price, so that would be positive. On the daily time frame, keep an eye on the Nasdaq with respect to its 50-day moving average. Yes, the session is recorded as always, so you can always go back and have a look at it. Defining the levels, defining the strategies. So the strategy is really, as I've defined you guys, I've already defined the levels and the strategies with respect to that, is really have a look, keep an eye on these particular levels. That is the strategy for us. So it's not like, because I don't like to trade based on indicators that, look, if the RSI goes here, if the MACD goes this, and if McDonald has doing this, and then you do this. I like to read prices, and then I believe prices are the best indicators. Everything else is just a lagging indicator. So what I really try to teach you in terms of a strategy is I try to teach you how to read the prices with respect to its moving averages. Again, moving averages are the average prices of the price. So, we got to understand if the price is trading above those averages, if the price is trading below those averages. And then it gives us the indication where we are moving. Now, as I said, with the Dow Jones Index, the strategy for us is to see, can the price break below this 50-week moving average? If it doesn't, that means that all long trades to the upside are very positive. But if it breaks to the downside, then that means also that, okay, keep your stop losses very, very careful if you are going short, because then you wanted to place your stop loss to the previous high, which the previous high is being here, because a lot is happening in terms of our fundamentals, the Federal Reserve meeting, and of course the stimulus package. So this market can reverse very sharply, very quickly. And if the market reverses sharply and quickly, you should be able to have be in a position where you can change your market position from short to long, and then place your stops to the previous lows. And the previous lows could be this one. 2 weeks before that, or the week before that. But right now, our focus is last week's low for the time being. So considering the current scenarios, will the USD still continue to fall? Yes, it is highly likely the US dollar will continue to fall, because everything is very dovish on terms of a monetary policy. I hope the question with the level and strategy is clear to you. If not, please feel free to post another question. We still have a minute or two. What are the chances the US dollar will go up considering the upcoming events, including NFP? Yeah, the NFP is next week. So if NFP comes strong, then we can really see a rebound in the dollar, because the dollar index currently is sitting at 2 years low, something that we haven't seen obviously in a long time. And when a trend like this takes place, it usually continues for some time. It continues to maintain those headlines. And right now, with the COVID situation improving, the US NFP data may see some sort of improvement, but not enormous improvement. So, I think there are still a lot more bad news to come with respect to that. Do you buy gold now? In my own portfolio, I've been long on gold for a very long time when it was at 1300, so it doesn't really bother me at all with that perspective. All right, folks, that's all for today. Thank you so much for attending this, and I hope everything makes sense to you, and then you guys have gained more than before. And good luck with the FOMC. And we'll speak to you guys next week on Wednesday, not Tuesday, Wednesday, same time. Thank you.